So what's the difference between a self-directed IRA and a traditional IRA? Let's clear something up at the top here. You're asking the wrong question. Why? Because a self-directed IRA can be a traditional IRA. The real comparison I think you're looking for is between a self-directed IRA and a conventional IRA, the kind you'd open with a bank or brokerage. So what's the difference? In 3 words: flexibility, control, and responsibility. In this video, let's get into these differences, starting with the basics. Standard IRAs or conventional IRAs are individual retirement accounts that give you access to publicly traded securities, things like stocks, bonds, and mutual funds. They're easy to set up, relatively low cost, and familiar to most investors. A self-directed IRA or SDIRA, on the other hand, works basically the same way structurally. You get the same tax benefits, and it can be set up with either a traditional or Roth tax structure. In fact, in the eyes of the IRS, a self-directed IRA is simply an IRA. What about from an investor's perspective? Well, here's the key difference: flexibility. With a self-directed IRA, you can invest your 401k or IRA funds in alternative assets. Think real estate, private equity, promissory notes, precious metals, and even cryptocurrencies. It's all about giving you more control over your retirement portfolio. Okay, so flexibility is one of the major benefits of self-directed IRAs. Are there any others? Glad you asked. First, there is the potential for higher returns. If you really know your way around a specific alternative asset market, for example, let's say that you have deep knowledge of a specific real estate market, you're not able to leverage that expertise in a conventional IRA. But you can with a self-directed IRA, and you can uncover opportunities that outperform the market to achieve potentially higher returns. Another benefit: portfolio diversification. Many alternative assets, think precious metals, promissory notes, they have low correlation with the stock market when it comes to their performance. So if you are tired of public market volatility, or you're getting closer to retirement age and you really want consistent income, you can diversify with alternative assets and hedge against volatility. Third benefit: you're in control. You choose the assets. You shape your investment strategy. You can even align your investments with your values, like local or impact investment. Maybe in your community, there is a multifamily housing project that is struggling to get off the ground. And you know that, my community, it needs more options for affordable housing. You can provide that with your existing 401k or IRA funds while still achieving higher returns than might be available with, for example, a target date retirement fund. Of course, no type of investment account is perfect, and self-directed IRAs are not without their downsides. For one, higher fees. Alternative asset transactions are generally more complex to manage than publicly traded securities. Think real estate deals, private equity deals. They aren't as simple as buying publicly traded Microsoft or Apple. There's more paperwork, more labor involved, and that means more administrative costs that you have to cover as an account holder. Second, strict IRS rules. If you don't pay attention when investing with a self-directed IRA, you could risk disqualifying your entire IRA. What are some examples of those rules? No investing in collectibles, no investing in your own business, and definitely no transactions with disqualified persons, like your spouse or parents, among others. Violating these rules can get your IRA disqualified, leading to hefty penalties and potentially a significant tax bill as well. Third, more due diligence. Evaluating private investments takes time, research, and a solid understanding of what you're getting into. You need to know how to ask the right questions to protect your portfolio. So, which type of IRA is right for you? Well, if you're looking for a hands-off approach, low fees, and broad exposure to traditional markets, a conventional IRA might be your best bet. But if you want more control, broader diversification, and you're willing to do the homework, a self-directed IRA could unlock some powerful opportunities. Either way, it's about aligning your retirement account with your goals, your risk tolerance, and how actively you want to manage your portfolio. If you're interested in learning more about self-directed IRAs, download our free Self-Directed IRA Basics Guide. It'll walk you through some of the most popular investment options, the IRS rules you need to know before opening an account, and a step-by-step process to get started. Finally, if you enjoyed this video, give us a like and maybe a follow if you're feeling up for it, and let us know if you have any questions in the comments below. Thanks for watching, and consider this. Where would we be if we never broke free from the conventions that bind us? There would be no parachute pants, no fanny packs, no socks with sandals. Okay, some conventions are worth keeping, but not this one.